Understanding inflation and how to beat it. Welcome to the world of inflation. In this video, we break down what inflation means. You'll discover how it affects your personal finances. Most importantly, you'll learn practical strategies to protect your money and even benefit during inflationary times. Let's dive in. What is inflation? Inflation happens when the general price level of goods and services rises. Over time, this means that each shilling, dollar, or euro buys you less. For example, a 2-liter cooking oil bottle in Nairobi might cost 580 Kenyan shillings today, but a year ago it cost 470 Kenyan shillings. A $10 lunch in New York could cost $12 within months. That's inflation reducing your purchasing power. How inflation works. Inflation is typically measured as a percentage change in a price index. The most common is the Consumer Price Index, CPI. CPI tracks the average cost of a basket of goods, like food, transport, rent, and clothing, over time. When CPI goes up, your cost of living rises. What causes inflation? There are 3 main causes. Demand pull inflation happens when more people have money to spend than goods available. Example, after Kenya's election stimulus packages, more cash flowed, raising demand and prices. Cost push inflation. When production costs rise, like fuel or imported goods, companies pass costs to consumers. E.g., high global oil prices raise Kenyan transport and food costs. Built-in inflation. As workers demand higher wages to cope with rising costs, businesses raise prices again, creating a cycle. How is inflation measured? In Kenya, inflation is tracked monthly by the Kenya National Bureau of Statistics, KNBS. The Consumer Price Index, CPI, is calculated based on price changes in items such as unga, maize flour, fuel, rent, school fees. Globally, each country uses its own index, such as the US CPI or UK Retail Price Index, RPI. How inflation affects your finances. Inflation reduces the value of your money. If your income stays the same but prices rise, you can afford less. It also affects savings. Stored cash loses value. Investments. Low-yield investments may underperform. Debt. Repaying loans becomes easier if inflation outpaces interest rates, but only if rates are fixed. Beating inflation through investing. One of the best ways to fight inflation is to invest. Assets that grow faster than inflation preserve your wealth. Examples include stocks, real estate, mutual funds, treasury bonds. Why stocks help fight inflation? Stocks represent ownership in companies. As prices rise, many companies earn more and their stock value increases. Example: Safaricom shares in Kenya may rise with higher M-Pesa usage. Internationally, Apple or Amazon stocks tend to grow with inflationary demand. Real estate as a hedge. Real estate values often rise with inflation. Rent income adjusts with the market. In Kenya, properties in areas like Ruaka or Kitengela have appreciated significantly over 5 to 10 years. Globally, cities like Toronto or Dubai show similar trends. Other inflation-resistant investments. Commodities, gold, oil, coffee, their prices often rise with inflation. Inflation-protected securities. In the US, TIPS, Treasury inflation-protected securities. In Kenya, long-term government infrastructure bonds with fixed rates above inflation. Budgeting and spending smarter. Inflation is a great time to revisit your budget. Strategies to stay afloat. Track expenses. Use apps or notebooks to monitor your spending. Cut non-essentials. Focus on food, health, and shelter. Buy in bulk. Save on non-perishables like sugar, rice, or detergent. Shop smart, compare prices across supermarkets or open markets. Managing debt during inflation. Inflation can either help or hurt your debt situation. Smart moves include: pay off high-interest debt. Credit cards or short-term loans cost more during inflation. Switch to fixed-rate loans. Protect yourself from interest rate hikes. Avoid new loans unless strategic. Only borrow if it brings returns, e.g., business expansion. Increasing your income. To truly beat inflation, grow your earnings. Strategies include: negotiate a salary raise, especially if your value to the company has increased. Side hustles, freelancing, selling online, farming, or Airbnb rentals. Upskilling, take courses in coding, digital marketing, or accounting to increase your value in the job market. Key takeaways. Inflation is inevitable, but beatable. Don't keep all your money idle. Invest in growth assets. Watch your spending and increase income where possible. In Kenya and globally, those who adapt fastest survive best. Final thoughts. Inflation is like a slow leak in your wallet, invisible, but impactful. But you can plug the leak by investing wisely, earning more, and spending strategically. Whether you live in Kisumu or Kuala Lumpur, the rules are the same. Learn, act, and stay ahead.